Hello out there, Real Estate Lab podcast viewers. Today we're going to talk about interest rates. Title's Afraid of Interest Rates Rising. That's why you're watching this. We're having some technical difficulties, such as what's been going on the past couple years, but Ian will be joining us. Hey, we improvise, right? Just like how we're going to have to improvise if interest rates move around. So let me introduce myself. You're tuning into the Real Estate Lab as well. JJ Tolentino, realtor with the Next Level Property Group at Keller Williams Realty. Let me pass it on to Liberty.
Hello, everybody. My name is Liberty Walker, realtor in the Austin area. And I get this question almost every day. What's going to happen in 2022? And I need someone like Trisha, who is an expert in her field, to tell me what's going on. So I can't wait to hear.
That is a good segue. Trisha Worley with Guaranteed Rate, VP of Lending. Feel free to introduce yourself and tell us what you may think about what we're going to chat about today.
Yeah, I'm happy to be here. Thanks for having me. Wow, if I had a crystal ball, who knows? It seems crazy already, and it's just January.
It is. Right. Are y'all? What would you say is the type of feeling buyers are having right now in January of 2022?
Well, for me and my perspective, a lot of buyers have come back in that had checked out in 2021, and they're like, has it settled? Have things normalized? And I'm like, well, guys, we're still seeing multiple offers, and we're still seeing offers go above list price. So it's not too much different. But what do you guys think?
It's not too much different, but that goes to say it's still pretty challenging, I would say, for buyers.
Yeah, I think the seed's been planted. I think you're right. Anyone last year who was thinking of it is now thinking harder about it. I think now everyone knows the rates are going to be rising and the values are going up. So it's just getting more expensive, the cost of waiting. So I do think now's a good time. We obviously don't have a crystal ball, but that Austin market is very hot and doesn't seem to be slowing down anytime this year.
Yeah, I don't think
and
so
we know that, obviously things happen that are out of our control and things we can never account for, like these past couple of years, things that we've never seen. But we don't have a crystal ball. But what is the federal government saying about tapering and interest rates going up this year? Have you heard anything about that?
Oh, well, yes. They've definitely come out and said that they are going to be tapering. They did, call that in the last quarter. So it is coming. It's happening now with all the other variables in the world going on. You just don't know, and you can't predict how soon that will be. The market is very volatile. We as lenders are just letting our clients know we have ways to lock in on new construction up to a year. Go ahead and just get those, prices locked in when you can, especially with the costs going up, labor going up, those builders' demands going up, everything is just going up.
That is so interesting, Trisha. I had no idea. You can lock in an interest rate for a new construction?
You can.
My mind is blown.
And I am learning about it too. They're coming out with some new things to help with, support these builders.
Wow. So I know when I work with new construction communities and builders who are building in those communities, they often tell us to go through their lender. But could we come into you instead and have that option?
Absolutely. Oh, yes, absolutely. Yes. A lot of those builders own those lenders. So they try to control the business. It just helps them, obviously making sure a client is pre-approved. They trust it a little more in that aspect. So that's why they offer the incentives, but not always are those incentives going to be good. We are a competitive lender locally. So we would always like the opportunity to go head to head and see what we can offer versus the builder's lender. There are some out there that they give amazing incentives. And we want what's best for the borrower at the end of the day. So we, can just go up and let them know where we can save the money. And, obviously rate is where you want to save the money over the life of the loan. But some people need that, might need that closing cost help instead. So that might be more important to them. So it's really just a case by case basis for the client.
And back to the
And it is
builder.
always,
Yeah.
it's always good to just shop regardless.
Yeah. The thing I'm noticing too about positioning and finding a position with the builder is that the builders sometimes I think most of the time the new builders require you to talk to that lender to put a hold on a property, and I find that tough because I was just in a situation. I don't want to call out the builder, but I kind of do because they should have told us more about the property. But we talked to the lender. I'm like, should I call this builder out? And then, everything was good. We're approved. And then we move into this paperwork and we realized something that we didn't know, that I felt like the builder should have told us. Now that's like a credit pull with that builder. Like if someone's shopping, doesn't that affect their credit score?
I mean, it's hard to say exact because so many things affect your credit score on a monthly basis. So utilization, how high your, balances are versus your limits. I mean, yes, when someone pulls your credit and it's a hard inquiry pull, it does affect your score. They say an average 3 to 5 points. Now, if you're shopping for an auto loan and a mortgage at the same time, that's not advisable. That's not going to be something that's going to help your score 3 to 5 points. It's going to go more down. But usually you have like a 30-day window in banking to go, if you're going to shop one lender, you can shop the others. They all should be around the same rate, if not the same rate. So the algorithm, I will say one thing on that is that we get every day is, oh my gosh, Credit Karma or, Experian, I know my score and I monitor it, and what you're pulling is completely different. And yes, that is always going to be true. And in our case, we have our own algorithm when it comes to a FICO score. And it's probably going to be the hardest compared to other lending institutions because mortgage is going to be like the most money you're going to borrow. So those kind of other credit, agencies that help you monitor the credit is a great tool to help you know what's reporting, but it's not your true credit FICO score when it comes to mortgage lending. So in order to get that, you need a lender to pull all through bureaus, and then we use the middle score.
That is a good amount of info. In fact, it's such good info. I feel like without Ian here, he typically manages you live viewers with the questions. And typically I could imagine like a bunch of questions popping up.
So don't worry. We will post answers to your questions after the show's over.
You may have to comment on, because this is on Spotify, YouTube, Facebook. It's everywhere. So comment. We'll get back to you. Liberty, did you have any questions about what?
I mean, yeah, I definitely do. I mean, let's bring it back to the topic, guys. Like, people are freaking out because interest rates are going to be rising. We know they will be. So, Trisha, my question for you is, how impactful are those points? I mean, what is today's interest rate for a conventional 30-year loan on the median home price, which I guess that's debatable, JJ. what that is today. We know that's going up, but what does
Should we
half a
visit that
point
for a
look
little
like?
bit? Does price matter right now, Trisha?
I mean, well, historically rates are, still considerably low.
Right.
So, I mean, but we're moving into the threes. We're no longer in the twos on a 30-year fixed loan conventional. You are going to see a range in the threes. I mean, a lot of it will depend on, your like down payment and your credit score and like what type of property you're purchasing. So, I mean, but they are trending upwards. So, what that means is even though they're trending upwards, that doesn't mean it's not still a good deal. It's not still the right time to buy. It doesn't mean that, when I purchased my first home in 2006, I was in mortgage still, got the best rate out there, and I was at 7%, and that was an amazing deal. So we're nowhere near those rates that we were seeing on those levels back then. We're still historically low. So it's just a matter of, maybe not focusing on the exact interest rate at that moment, but trying to get into that house if you haven't yet. If that's where like you need that push and you're looking for the next step, this is a good time.
Definitely.
When we talk about 06 and 7%, and we're talking about threes now, that's such a big gap. We won't see like 4 points or something this year, or do we not know, or what does that look like?
I mean, no one can predict interest rates.
Okay.
It's like, I mean, we'd be millionaires if we could. It'd be amazing. But
Yeah.
I mean, as far as like, if you look back, historically on the trends of rates, you can go back and I think it's even on bank site. I think it's bankrate.com. And you can look up the whole history of, what rates have done in the past 20 years.
Historical trends. I think that's a pattern that we find on the podcast. We talk about pricing, we talk about appreciation, we talk about what happens to rents, what happens to property taxes. You could really just go off the trends and just call it, right? So I like that you brought that up.
And I think like, people that are thinking, oh, well, interest rates are low, so we know it's a good time. If they rise, it'll be less of a good time. But you're saying that even if they were to rise a little bit, we're still at historical low rates. So there's really no like, oh, we'll just give up and never buy. I think that appreciation and everything will be trending upwards, at least in the Austin area. And
I agree.
so
I think
really
so
the
too.
sooner the better that you can get a hold of some of that land.
Yeah.
Yeah.
Well,
and I also don't want to like make it like Austin's always gonna grow. Like if I didn't think it was gonna grow, I'd call it too. Like I don't really care. Like I could sell either way, right? So I think we're like genuinely thinking it's a good position. And I think interest rates there's so many elements, right? Like interest rates do matter, but like Liberty said, there's still the city itself to factor in. And I think, based off our conversation, you just go with this process.
Exactly. And there are other elements too, like the tax rate. Like we could do a whole nother podcast, and we have on tax rates and the different tax rates around the Texas area. I mean, that could get you right there. So it's like a bunch of factors coming together that are going to make or break your goals and what you want to do, what you can do.
And the property itself, maybe it's a fixer upper. Like this is so much, or maybe it's brand new and you don't have to worry about it. Those are all things to factor in.
Yeah. And the one thing, so like on the lending perspective, what we, yes, rates are going up, property values are going up, and we are, concerned clients might want to just give up and decide I'm just going to rent. This is too expensive of a market for me. But the reality is that, renting is just going up as well. So if you can make it work, because do you know what the average rent is in Austin right now?
I always floated like $1 a square foot, roughly. I don't even know how I came up with that. I just see it. But you can look it up. Yeah, let's just say $1 per square foot. Does that sound good? What do y'all
I
think?
mean, it depends, JJ. I mean, are we talking about clean?
Yeah,
Because
or downtown. I
because if
mean,
you're
Oh,
in
downtown, no. I
Mueller,
would,
if you're looking
yeah.
at a
I think
$1,900 square
$1
foot,
like the greater Austin area. Definitely not downtown. Like Round Rock, 2000s property, something like that.
yeah, so a lot of the reasons people don't pull the trigger is down payment. So that's one thing that there are a lot of different ways you can maybe hopefully access some down payment. If you have, stock or 401k, you can borrow against it with no tax penalties. You can get a gift from a family member. You can, there is down payment assistance for people who qualify. So there are ways out there. And I know that's what really is the hardest part. And there are programs out there that have higher financing. You might not need any money down. So there are options. It's not, obviously everyone fits in the same hole, but it's open to a conversation with your financial advisor or a loan officer and just your agent to see if you even have a chance and if this is a good time for you. The thing is they're not making more land in Austin, and everyone seems to be moving here. So it's still like you're gonna build that equity and gain that appreciation by purchasing.
Yeah. And again, it sounds like we're cheerleaders, but I think we're just calling it how we see it. The key theme I feel like is appreciation. Austin's healthy, positioning. It's still a seller's market. So if you could get in and it makes sense, of course, there's other elements like get in. Interest
JJ,
rates aren't going to kill it.
I have a question for you.
Yeah.
So looking back on 2021 and
Mhm.
all the clients that you've worked with and the listings that you had, how many times, what do you think a good number of offers would be an expectation for buyers to have that are shopping in the medium home price in Austin?
I wish I could say one, but it doesn't work out like that. And I would also like to wish I coached enough and gave you that push to do it in one shot, but I do my best to coach, and I would say I've been at a closing and the buyers were counting one time and they're like, "That was about 10 offers." I was like, "That makes sense." It felt like about 10 offers, but
Ah,
usually less. I think we kind of get it. We kind of figure out what to do, but
yeah, but I
that's
mean, that is so
there.
impactful. 10 offers they had
10
to make,
offers.
but look, guys, they were at the closing table.
Yeah.
So
Yeah.
get your battle gear on. 2022 is going to be cray cray, but with the right coach and the right lender, it can be a possibility.
The right realtors like the two on here and the lender on here. Is what other problems are you seeing, Trisha, in a seller's market, and what's going on with your buyers, or what's like a frequently asked question with what you saw in 2021?
Oh gosh, appraisals, 100%. It's the appraisers, the demand for them, the timing, the price for them. It's put the lenders and the title companies in, just a pinch at the last minute trying to scramble to get everything closed on time. So what's typically happening is, there's multiple offers and, if the buyer does have lending, it has to be a very aggressive, clean offer, time, you're not typically getting, more than 30 to 45 days to close. And those appraisers are taking probably 10 to 20 business days. I mean, it depends on the area, but at least 10 to 14 business days for a typical Austin appraisal. And they're expensive now. I mean, they're getting up closer to $1,000 for just a regular single family residence.
Wow, $1,000 for
Why
an
is
appraisal.
Well,
appraisers going up?
average, yes, they'd be average. I mean, they start, right now we're disclosing about 600 to 700 when it used to be a lot less. And
Why
that's
would an
not
appraiser
a
price
rush.
go up?
The demand is just insane. And now they know they're in demand and they can pick which properties they want to do. There's third party, they're a third party contractor. No one owns them. So you're at their mercy, and there's only so many local appraisers. It's a hard industry I don't think it's a super hard industry to get into, but I know you have to work under somebody for a couple years before you can go off on your own.
You have to work, I think it's something like
so many hours.
Yeah, 260 apprentice hours.
And it'd be great to have an appraiser on this podcast because they have so much information on just properties and appraisers and what matters and what doesn't, as far as value. So
yeah, let's get an appraiser on here, JJ.
Hey, if you're watching this and you know an appraiser or are an appraiser, let us know. And
we'd love to have you on. We'd love to see what you guys are looking at versus what we're looking at. Because come on, guys, what happened last year? There was some gaps.
Well, and they're working hard and they're now have money and they're, taking time, which they should. I mean, they have made a ton of money the past 2 years with all the refinances, the boom that came with the refinances, and also just the purchases are up. So they're busy. They are busy. So that, we're getting those reports right before closing, and then we still have to review the appraisal. If there's issues or corrections, we still have to, get those done. And then the title company, waits on us to get docs out. We can't get those out. So, appraisers 100% have been our number one issue.
Well,
and that's just appraisal. We didn't even talk about the pricing.
And that's in the state of Texas. That isn't just in Austin. This is Dallas. This is Houston. This is Lubbock.
Hey, y'all want to hear some average prices in the area for December as 1 month as a snapshot, just to give us some perspective?
Go for it.
It's 1 month. It's not the whole year, but let's just kind of see where it goes. All right. Lakeway, average closed sales price, 1.2 mil. Yes, I get in shock and I look at price. I'm studying this too, and I'm like, wow. Round Rock, Texas, about 500,000 average closed price for December. Cedar Park, 561. Manor, 385. Gerald, 367.
What?
Hutto,
360. Gerald coming in. Coming in hot.
Hutto, 415. Georgetown, 455. Pflugerville, 468. This is hundreds of thousands, y'all, by the way. Austin, 714. 714, 100,000. For your Austin house. Leander, 542. So Trisha, what do you see with the?
Wow, Cedar Park that's crazy to me. That's amazing. They have so much amazing growth going on.
I love.
How do you coach people on this whole cash thing, like cash and financing and cover the appraisal and the gap and all that stuff?
Yeah, what's interesting is yesterday I actually had a meeting with my financial advisor, and we were just, we do it every year, and we were talking about cash and, what people are doing with cash, and people are paying cash. But I think people don't know where to put their cash, and it doesn't need to sit in the bank right now.
Because when it sits in the bank, it loses value.
Well, the inflation is going up, so the value of the dollar is going down. So you
put it in property, and then that way you can rise with the inflation.
Yeah, and I think she's more about diversifying. So real estate, investments, retirement, stocks, all different ways to do it. But there's a lot of money coming over here too from overseas.
Pyrex dishware collections. I'm kidding. Don't do that one.
So you have a buyer and they come to you and they say, I may have to cover 10, 20, 50,000 to make this work. You calculate that and you're like, yeah, you could put in 50 to that. Like you're qualified for that. That's what you see.
You mean like for down payment?
Well, the gap, I was talking about back to the appraisal gap on like offer and.
Okay. Yeah, so I think more that's always now with you guys that's like talked about up front with the appraisal waivers. You know, if
Yes.
they know if it doesn't appraise, they're going in, what's the plan? So most people have the plan when they come to me, or we make sure that that plan's good because we obviously want to protect the earnest money. And at the end of
What's the
day,
winning plan? Because you see more winning plans than us, because you're like in between, right?
Yeah, I'm on the edge of my seat. I want to hear this plan.
So what's the plan? What are people doing?
Okay, so give me an example. Like, I mean, for
Let's say you
Sure.
submitted an offer on a home that was listed for 800 and the offer was 1 million with an
Okay.
appraisal waiver attached, and then it appraises for 900. So there's $100,000 gap. What do you do?
So originally in that situation, let's say they're buying it at $1 million, they're going to put 20% down. The loan amount's 800,000. Easy, right?
Mhm.
Well, now it appraises at 900,000, so they have to come up with 100,000. They're
Mhm.
probably, what we would do is say, okay, worst case scenario, you have to at least put in 10% down because that's what we need on a jumbo. We can do a 10% down product. So we make sure in that option period, they know, because we think, oh, it's going to come in at 900. You're going to be able to cover the 100 plus the 10%. So they might just do a different type of loan product. It's a little hard on our end when that does happen because we start the process with an investor at 20% down, but we know it might go to 10%. So we might do something in the background as plan B. And that has happened because when that happens and that appraisal comes in a week before closing, the seller is, it's gone up. I have other people who want this house. You have to close.
Yes. And I mean, just listening to all that and taking it in, I mean, I'm coming in with a real estate background. Those of you listening and watching at home, there's a lot of moving parts, guys. And so
there is. So you do want to make sure you're protecting your earnest money, obviously. So and that's what we don't want anyone to lose money. At the end of the day, we want everyone to get paid and get the house. So it can get very stressful, but hopefully, you're working with a seller that isn't, that's going to work with you. And I do see 80% of sellers are willing to work with the buyer if they need more time or anything.
And one question too, before we have our wrap up final thoughts, what percentage of appraisals are you finding that are meeting value?
Ian's back.
I'm so sorry.
Ian's back in the mix. It's all right. We talked about how we roll with the punches, just like how we're going to roll with interest rates moving.
Yeah. What did I miss other than interest
we're
rates?
on
all of it.
Yeah. So to answer your question, Liberty, I mean, we honestly don't see. I mean, we've come into many appraisals that have not appraised when someone's gone in, crazy over asking, but that honestly isn't, like, the values are moving with the sales.
Mm-hmm.
So, I mean, we're not seeing hundreds of thousands difference. We're seeing like 20 to 50,000 lower.
What's interesting to me? I think some of this depends on if you're buying a resale or in a new build community, because some of the builders will share their appraised value and other builders will not. And it really skews a lot of the data. Right? So if an appraiser is to go out,
because Texas is a non-disclosure state, by the way.
Yes, very important. Sorry. Yeah. So because Texas is a non-disclosure state, you do not have to tell anybody what you paid for the property. By default, it's a non-disclosure state. You can tell people if you'd like to, but if you decide not to, then they don't need to know. So if a builder sells a house for $350,000 and your neighbor bought theirs for $375,000, well, you probably won't know. You can see what they listed it at. But when the appraiser goes out,
that's a good.
If the builder doesn't tell them that, these people paid $360,000, so you're good, then it becomes a little bit more of a challenge.
Hey, for wrap up, if we have comments, you want to try to and see if Trisha could answer like a few words.
Anybody else?
Do we have any comments that were made on the page?
Yeah, we have sorry. Oh, got it. Okay, so let's see. Aaron says, Oh my goodness.
Hey,
I'm so
let's try to
sorry. I
do
was
a rapid
in
fire,
a
'cause this is
conversation
actually-
with
this is
the
Aaron
actually-
real
says,
estate
I
client.
think rates are going up will cause prices to go down. I really don't care about the rate. I care about if I can afford it. Is that the wrong way to think?
Let's do super
That-
rapid fire because this is already hitting our mark. What do
Well,
you
I
think?
think
Do you think you can do fast answers?
I got mine done in one offer. Aaron,
Good job.
the key is to not be scared. Just your realtor. Yeah,
I'm sure
we
that means
absorb
trust.
that emotion. You guys just like roll with the punches. Like we are here to absorb some of that.
I'm paraphrasing here. I think he means trust your realtor.
Trust your realtor. For
But
sure.
Or he can mean just your realtor needs to be scared, and that's good too.
Aaron, you're scaring me. I'm kidding.
And one thing on that, Aaron, is that, if prices do go up and people decide not to, the demand goes down, then yeah, prices can definitely go down. I just don't know in Austin if that's going to apply since a lot of people are moving here.
Mm-hmm.
The demand a lot right now. And the thing with, our market going down is rates have to go up and jobs have to go down as well. The job market is really strong.
Yeah,
Here.
I mean, everywhere you see those hiring signs.
Yeah.
Do we have any other comments, Ian?
Yep,
that we
just
can read?
posted.
Oh, Liberty Hill. I don't know. I would say close to Leander. Whatever I said. I forget what I said. 500s. I'm
Said
guessing.
561, I think.
There
Yeah,
you go.
Liberty Hill is very desirable.
Although I
And
think it even might be
nothing-
higher because there's some nicer stuff. It's like a small town with nice houses. I don't know.
yeah,
around
it's very nice.
We'll get what she's saying.
So-
Anything else, Ian?
Closed
There's a lot
price
of builders in Liberty Hill right now.
average.
And
So
a lot of
average is tough, but kind of a median closed price in Liberty Hill was between 480 and 620
Ha! I said 5.
Wow.
in the last. Just hold on. In the last 10 days.
Woo! That's
Right.
white hot data.
Yeah.
New active listings today, 130 guys. So how many buyers are out there looking?
Rudy
more than
says, is interest rates more for vacation homes or construction loans?
So vacation homes, yes. Fannie Mae just came out and they are going to treat second homes. They're going to hit them on rate now. And that I think starts in February. I'm not quite clear. I can get back to you on when that starts, but they are coming out on second homes because before second homes were the same as a primary residence. They're not going to be as bad as like an investment property, but they are going to be in between property. And then construction loans, I don't personally do those. Local banks are the best for those. I do have a client doing one right now, and the rate seems to be around the same as a Fannie Mae rate.
Good.
And the big difference between a vacation and an investment is what?
So a vacation home is considered, so there's 3 ways to purchase a home. It's your primary home, it's your second home, which would be in a vacation home, or it's an investment property. Your second home normally needs to be about 60 to 100 miles from your primary, and it needs to be in like a resort town type area. Austin's considered an area, but it can't be like, I don't know, in the middle of like a city next to your house. Like that's not a second home. But a lot of people in Austin are buying second homes for their kids.
I was going to say, is it because of is it because of tenants in some way? Right?
Yeah,
Like,
so if you intend on collecting rent in the first year of purchase, then it's considered an investment property.
yeah. But I mean, I'm trying to think of why they would think that, right? Like why the Fed would change the rates for vacation versus that. Like I know there's a big difference between long-term rentals and short-term rentals in the type of insurance that you need to get, how the presumptuous effect of how people will treat your property based on whether or not they're vetted. Like there's all these things, and maybe that was part of the calculation.
Well, it's just risk, when you're in.
There you go. That's the word. That's the word.
It's risk. It's risk. When we're in a market that, some people are not average, I guess nationally, Austin's in a huge bubble, but people are losing their jobs and people are, the first thing to go is going to be your second home or your investment home. You're going to still pay on your primary home. You're going to so they're trying to, it's just risk. They just think if it were to foreclose, which one's going to foreclose first? It's going to be the second home over the primary.
Ooh, Rudy, if I messed up your name, my bad. Vacation homes can be on Airbnb for 200 days a year in Texas. Question or comment? What does that mean? Vacation homes can be.
It's a question mark, but I think that's a statement.
Yeah,
right.
My Airbnb specialization, I'm still building on that.
Yeah, and I mean, you can Airbnb a primary home. Like you can. And I don't know, like, I guess what the IRS would consider like that. I think that's more of like a CPA question. As far as the mortgage companies go, they're, as long as you pay your mortgage, hopefully you don't get audited, but they can call the note if you buy a second home, but it's a true investment. They can call the note.
I think what they're trying to do is make sure that they get paid on every dollar that you earn, period. Right? So if you say it's one thing and then it's not another, we call that mortgage fraud. And I get the rates are kind of like, whoa, what? And it changes per type. But yeah, and then like short term, like the question for short term is, how do they know you're actually paying them on your short term rentals? It's that kind of stuff. Are you claiming that? And these are all things that the government's trying to speculate on how people are handling their finances and where CPAs come in.
I feel like that in itself, guys, I think I'm sensing a topic for one of these real estate labs.
I think I agree with you. That's a good point.
To invest in Austin, you have to get the highest rental rate you can, and and it also kind of fits. It's like a party town.
If you can cash flow. There are a lot of investors that are not cash flowing in the Austin market.
Well, if you go short term, there's more.
Short term, you make more, but you can't use that as income for a loan if you want to buy another property. Right? Unless it's been a certain amount of time. Like there's all these little variables and tricks in there.
Ian's the guy with all the insight there. It sounds.
Yeah, you gotta claim it.
That live, I learned.
Pretty much.
I love your jacket, by the way, Ian.
Yeah,
that's great.
Claim the income on your tax return. You can use it. If you don't claim it, there's no income to use.
So I'm hearing, don't claim it. From the mortgage officer, do that. No,
I'm kidding. You're the CPA, exactly.
What not to do while investing in Austin?
Hey, my hardest clients are real estate agents. They write everything off.
Well, that's important too, right? Like if you're trying to buy property and you're writing everything off, then your income is a little more humble.
Yeah.
I recently found out that I can pay my 2-year-old a fair wage.
And
pay your 2-year-old? God, can I pay my puppy?
I didn't read about that one, but you could pay your family and your kids.
Your puppy is a lot like a little human. It's so sweet.
Well, right.
And it has sweet.
So then you should be able to pay your puppy.
Well, guys, I feel like we're digressing here. And Trisha, thank you so much for being a part of the show.
I've been wanting to be on this.
And I'm coming to you to learn how to lock in that new construction interest rate, because that's one reason.
Do
1 year lock on new construction. John S. Sorry.
Oh,
we're gonna get some comments out before we end here.
I wonder what he got. What was your rate, John? I wonder what his rate was. But it was amazing.
150 days. It's got to be good.
You want me to go talk to your builder for you? I'm kidding.
That is the one thing I will say on builder deals, we are getting a lot of calls. People want to walk in, but there's delays. We have a lot of clients closing February that were all supposed to close in October.
Oh my goodness. Hold on. I got to share this. You ready for this?
More comments?
And we're done here. And scene. Oh my goodness.
Oh my gosh. Wow. Can you pay to extend that? You've got to ask if you can pay to extend.
Well, I would pay to extend it if it's going to be your main property for, X number of years. You got to do the math on that, but that's Wow.
That looks amazing, John.
I
Please, I
know.
beg you.
That's
John
so
is
And
ready.
good luck
I
to
have that
you,
rate right
John.
now.
Tell them you don't care what type of fridge. Just throw anything in there and lock that rate in.
Should we do one more question?
Let's do it.
I can
Top
answer
30?
this. Go ahead and ask it. Yeah.
Can
we put a fixed
fixed
time
rate
to
on-
close clause? Sorry, in these contracts. I felt like in school when they make you read together.
The answer to this is most builders will put in a default of 2 years themselves. So you don't get to choose. They do because they write the contracts to their benefit.
Mhm.
Any other
There you
objections
go.
to that answer?
I use an extension.
Oh,
Well,
John
good.
asks, I have one extension available for 60 days.
Yeah, I think you have to see what that costs versus how
Path-
much you would save from the difference in interest rate over that amount of time.
The path is in the math, John.
The path is in the math, and your lender can definitely help you with that.
And or Trisha.
Yep.
Patricia.
Yes.
I can tell you where we're at today. Just give me a call.
Apparently, this is a hot topic, y'all. Let's we'll bring Trisha over again and keep tuning in. We got all your real estate, interest rate, all that is real estate in the greater Austin area.
And good
Appreciate
luck, you
y'all.
guys. Good luck with
Happy
your offers
Friday.
this weekend.
Thanks
Heck
again
yeah.
for tuning
Thank
in.